And I'm gonna be high.
Good on you, Donald. I'm the Rocket Man, yeah.
I'm a rocket man. And I'm gonna be
Rocket Man. I'm a rocket man. I wanna go to the moon.
Well, sweet. We're going to get right into it. Thanks for tuning into another episode of Let's Talk Logistics. Today, we have somebody who doesn't need an introduction, but I'll give him one. His name is Pat Martin. He's the founder of V53. He's also the vice president of corporate sales at Estes. And how many years have you been at Estes, Pat?
This is year 25, Gabe.
And I'm going to start out with some hot questions right out of the gate. Is Estes the largest LTL carrier in the market by revenue, you think?
No, FedEx would certainly be the largest.
Okay, let's take FedEx out of there. I'm thinking Old Dominion, R&L, Estes, Saia. They've got publicly traded numbers, and I'm going to come out with some hard-hitting questions right away just to kind of get the conversation going. But everybody talks about the publicly traded carriers. Not many people talk about R&L and Estes, and if you're in LTL, you know that that's actually where the action's at right now. I think you guys are those two carriers are the fastest growing for sure, in my opinion.
Yeah, so being a privately held company, we don't share everything, but we share a lot of things, and I'd certainly put us in the top three. It just depends on how you measure it. Maybe we could be two, but whether you measure it by shipments, revenue, profit.
Yeah, trailers, network, terminal, all these different metrics.
Yes, there's a lot of different metrics, but we're the largest privately held trucking company in North America, and pretty large business, $6 billion business between Estes, EFW, and Estes Logistics.
Okay, yeah,
so I'd say pretty large.
yeah. Large is an understatement, and also I think that everybody sees the trucks and knows the name. And if you're an LTL, you've probably worked with Estes at some capacity, but a lot of the attention is paid to the publicly traded carriers, and then the shipment count and bill of lading count of Estes and others are actually pretty impressive, and so they don't get as much clout. And then, one of the other questions I had for you is, can you differentiate EFW from Estes for me? I know EFW, the audience maybe not as well, but it's a pretty cool business unit.
Sure, yeah. So Estes Forwarding Worldwide, EFW, is a subsidiary of Estes Express Lines run by Scott Fisher. And basically, they're a freight forwarder, but they do some other things as well. So if you think about Estes, we're pretty much core LTL.
Mm-hmm.
Anything that we don't do, we move over to EFW.
Makes sense.
So Estes Logistics focuses on final mile, dedicated truckload, those types of things. So between the three companies, I always say, unless it's tanker, truck, or small package, we probably have a solution.
Yeah, for sure.
Yeah.
And you guys have a pretty large network, so EFW can pull off of Estes line haul if they need to, although that's not all that they do, but it's kind of a cool mix there. It's
Definitely competitive advantage for EFW for sure. Having, they're not only a freight forwarder, but they have access to a very, very large line haul network to move freight. And so, we're certainly probably their largest customer.
I'd imagine.
But they have some other ones that are pretty close to our size. So, they don't use us for everything. But they've got a great product in the marketplace, and they've been growing and built a really solid business over the years.
All right, now I want to paint a picture of Pat Martin for the audience's sake. I know you well. The industry knows you, but you don't do a lot of podcasts, so we haven't maybe gone through your origin story. How did you end up being at Estes for 25 years? Like, did you start? Take me through the origin of getting there and then how you got promoted all the way up.
Yeah, so I kind of got there on a fluke. Prior to, I kind of grew up in the golf industry.
Really?
So, I didn't really grow up in this industry. But, 25 years ago, I met a guy named Billy Hupp on a golf trip to Ireland. And I was looking at a few different opportunities and had to make some decisions before I got back. And I've never met Billy before, but Billy is our assistant chairman of the board, our former COO, and Rob's first cousin.
Nice.
And so I'm on this golf trip, and we had a great time playing golf and playing blackjack and doing other things. But we just got to talking, and he said, "Before you make some of these other decisions, I'd love for you to meet my cousin, and we're going to try to grow a trucking company, and it might be something you'd be interested in." I had really young kids at the time and didn't really want to move to California or Atlanta, where my two opportunities were. I was either going to go to work at TaylorMade or Mizuno, um, but decided to take a
Zuno's a
chance on truck.
throwback brand. Mizuno. I remember that when I was a kid.
Yeah, so took a chance on trucking, and the Estes family is an amazing group of people that are really, really smart and have built, you know, if there's such a thing as true competitive advantage in culture, they've certainly done it with culture and a gritty, hardworking team of people that are willing to go the extra mile. And they have ability to create a lot of loyalty. I wasn't sure how long I would be in this trucking business or if I'd even
Yeah.
like the trucking business, but um, I love the business. I love I guess for me, like the show, How's It Made?
Yeah.
You get to go out and see all these different all these different entrepreneurs that build businesses and learn how it ticks and, how they built the businesses and from huge companies to small companies, everything in between. It's been a really, really fun time for me. And, working for a great family, it's just made it that much better.
That's awesome. And 25 years, when did you take me through when you started V53 and what the origin story of that was? I mean, just a cursory LinkedIn, I can tell it's in 2020, but maybe that was in the works long before and you launched it then. Take me through
Yeah.
that.
Yeah. I started angel investing with a very simple thesis. It was invest in software being sold to shippers, carriers, or 3PLs, then only invest in the ones I could help personally. Right.
Yeah.
So, I was doing that probably since 2015, had a few exits, had one move to profitability, start paying dividends, and the rest of them are still alive today. And so I decided to do a small fund, did a $5.4 million fund, invested that in Emerge, my carrier, and eDre, and then decided to, keep it going with fund two, raised about $30 million in fund two. We've invested that in 22 different companies. Um, Been very, very lucky to invest it in some really fast growing companies. So the portfolio fund one's done really well. Fund two's on pace to do what we want it to do, and the angel investing has been terrific. But again, it's all the same thesis.
Yeah.
Invest in software being sold to shippers, carriers, and 3PLs. Only invest in the ones we can help. And the LP network and fund two are a lot of folks in this industry that I think are the movers and shakers in this industry and can actually help these founders, not only with giving them business, but giving them mentorship, and other things. So it's been a great run, a lot of fun, and looking forward to do it for a number of years to come.
Yeah, it's kind of similar to like the Silicon Valley venture funds, Founders Fund and Y Combinator, but you took it and said, hey, not only is it going to have a niche in what you invest in, but also the LPs. And, maybe we'll even talk. We actually are I'm going to ask you some questions about venture. What is an LP? All those things. But for now, the LPs are all industry titans, as I would call them, or a lot
Yeah,
of them are.
no
And
question.
there's certainly a network effect of, they've seen it, they know the technology can plug into the carriers, and there's like a flywheel that can help a company start rather than just selling from obscurity. They can get a pretty quick start in the V53 network because if they're selling to carriers, they've got some connections. If they're selling to shippers, the software's got to be good, but there's connections there too. So it's pretty
Yeah, I'm
interesting.
really looking forward to spending more time with the portfolio companies, helping them. We've been able to help, but there's a lot more we can do and double down on that.
Yeah.
But yeah, a lot of the LPs are everything from a industry titan to a owner of a 3PL, owner of a carrier. It's really a really broad group of people that I've got a lot of respect and admiration for.
I might even say, and don't take offense. I think you started V53 just so you could play more blackjack and golf because it sounds like you were a golf guy. So I think that that's perfect. You're going to help the companies by golfing. So no, I'm just kidding. But
Well, I would say this: I do love blackjack, and my rule is always take what you're willing to lose and be happy with. So I'm not a real big time gambler, but I do play a little bit of blackjack, and certainly venture capital is a bit of gambling as well. But I
Yeah.
haven't played golf since October, but I am playing in a couple of weeks.
Is that
Uh,
due to an injury or you just decided to quit?
it's a mental illness of doing too much work and not enough fun. So I'm working on that. I will get better as I get
Uh,
older, doing a little more of that. But I have just as much fun doing what I do as I do playing golf. So I just need to make a little time to get out with some buddies.
that's awesome. So, obviously, I asked when did you start V53, and you were talking about why you launched it. But so you launched it in 2020 was Fund One, right?
Yeah, fun one was 2020.
And that Fund One, take me through, and then actually we're going to go in reverse. We're going to talk through high level how you went from Fund One to Two, and like the funding environment that you've been in from 2020 and 2025, and how that changed. And then I think it'd be super useful. I've never had anybody on the pod that actually, we've talked a lot about venture capital, but you run a fund, so you know all of it. Um, or at least people think you do, so that's good.
Yeah, that's
So
good.
I would say, so from Fund One to Fund Two, Fund One, was that during what I would call the ZERP era, where it was like, hey, big valuations, and you guys had to be careful about what level you invested in, or take me through that in 21 and 22 in the market.
Yeah, it's really been an interesting, dynamic that's gone on for the last few years. In 2020, well, 2020 was COVID. So it kind of changed how
Yeah.
everything sort of worked. And there was a lot of calls like this going on versus face to face. But the valuations, and once we kind of, once I would say after maybe 5 months of uncertainty, maybe 4 months of uncertainty with COVID, things began to really take off. E-commerce took off, and people were buying stuff at home. People were going out and traveling, spending some money, on day trips and things like that. So the economy sort of picked back up after about 4 or 5 months of like real uncertainty, and then just began to boom, right? And it boomed for a couple of years, and valuations, especially in the tech arena, were at an all-time high. And there was tons of interest in supply chain, tons of interest in fintech, and all kinds of other things.
Yeah.
Valuations were probably double back then what they are today. And so you've seen them literally cut in half. Like, it was hard to find, in 22, it'd be hard to find a startup valued at less than $20 million.
Yeah, and it wasn't off of EBITDA or any like
No, it was just a
or revenue
ridiculous
it was
number.
just, what do you think you're worth? It's a really good idea. There's a
Yeah.
lot of people who will give you money.
And so there were a couple of things we never bought into. We never really bought into that. So we weren't investing in things that were just crazy valuations out of the gate. And we didn't invest in any businesses that were kind of this Silicon Valley burn, 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 which we've seen what kind of happened in the supply chain space with that type of company.
Yeah, we all saw
Um,
it. Yep.
yeah, we didn't invest in any of that kind of stuff. What we're looking for is the real niche stuff.
Mhm.
It's the type of company where their software really provides a solution to a problem that's really worth solving, that a shipper carrier or a 3PL could really, hopefully implement something like that in a very short time frame, onboard very, very quickly, see ROI very quickly, and have a potential to really make a nice impact on someone's business. So that's always been kind of what we've looked for, and kind of stayed away from, the things that, are just flashy and throwing dollars at it. And, it's really more, it's probably the less sexy side of the business, where it's, nuts and bolts and blue collar solutions to blue collar problems.
Yeah, oh, yeah.
Um, a lot more, you know, operational type stuff. And, you know,
How do you so define LP? I mean, I think it's limited partner, but what is a limited partner?
yeah, a limited partner is really just the investor in the business.
Okay.
Well, a typical venture capital firm might work on a 2% 20 model, which means the investors pay a 2% fee for us to manage that money. And then we get a 20% return on the investment as the venture capital firm. We return 80% to the investors.
And the investors are the ones saying, I mean, when you start a fund, you got to go convince LPs to pool money, that first 5.4 million. That's
That's correct.
you pitching, right?
That's
And
me
saying, hey,
pitching.
I think I can, if you give this much at a 2% fee, 20% return, I'm going to go do this with it. And there's going to be a few home runs and you have to put money somewhere anyways. Why not in the industry? Is that,
Yeah, and yeah, and I think for us, you know, you can be really, really fortunate. Like, I guess I'll tell you why I kind of got into venture capital. As I was an angel investor and kind of watched venture capital firms sit on, cap tables and stuff like that. Venture capital is a really good source of money for entrepreneurs starting a business and, entrepreneurs that need capital to keep rolling. But I didn't necessarily like what I was seeing in venture capital and private equity, what really kind of happens to the founder over time
yeah,
if they're not really founder friendly. Eventually what I would see is they would start to lose control of their companies and end up selling the companies for, they would have less equity in the business than they should, and sometimes end up with no equity. Um, and so I always I always was kind of anti venture capital. And so coming into it, you know, I don't want to beat up an entrepreneur. I want to help them win. And
yeah,
if I can help them win, then, you know, we'll win too. And I like to hit some singles, doubles, triples. If we can hit a home run, that's great. But the idea of these companies we invest in aren't to just invest in 22 companies and hope one or two makes the fund.
which is typical for a seed stage VC fund. That's actually the model, is like invest in 100 a year, give them all a $50,000 check and hope one of them hits.
That's right. And so we've never really followed that model. What we've done is try to pick the right problems that need to be solved in this industry and know beforehand whether or not they're going to sell. One
Yeah,
of the advantages of our LP network is we can put the products right in front of the people that are going to buy them.
true.
Will you buy them or will you not? What would you pay for them? And is this really going to, be meaningful enough to you? And will other customers buy it? So we're trying to, it'd be great to hit some, you know, home runs, some unicorns, and they may very well have it in
Yeah.
our portfolio sitting today.
Fund two is pretty strong. If yeah, the companies we were talking about, those some of them could be big home runs.
Yeah, we've got Highway in there, Genlogs, Clearjet, we've got Drone Express, we've got Better Truck. We got a lot of amazing companies in Fund Two, and it's just a matter of you know I think the economy getting a little better.
Yeah,
Um, I think we're probably outperforming most venture capital firms right now. And, with a little help from the economy, the trucking industry will take off again.
for sure.
Um, and these companies will be sitting in a really good spot.
Yeah, I mean, when you're selling, especially like let's talk highway, not specifically to their business, but they're selling to brokers and carriers and 3PLs really, I guess. Maybe they're selling to others, but that just kind of I think they sell to shippers too. They have a partnership with USPS and others. So, but they're selling, to an industry that if it grows can afford to buy software.
Yes,
And if it
no
doesn't,
question.
it's harder to inch out every deal and you got to do different terms, but that could be a boom time for them. So,
Yeah, as the market gets better, they just will buy more software.
yep,
And Highway is a case where the product's so strong right now, whether you have the money or not,
you kind of
it's just an ROI that's worth it, because trucks do get stolen and fraud is a bigger issue today than it's ever been.
and it seems to be trending worse each month.
Yeah.
And it's like, how is that not getting fixed? Somebody could make $1 billion by figuring out a real fix for it. But I think there's too many people making money preventing it that, it'll
Well, yeah,
continue. So,
between Highway and Genlogs, I think you're going to see fraud start coming way down for sure.
yeah. So I don't know Gen Logs as well. I just see their name, but they've got like a pretty cool branding where like they're just like showing pictures of trucks that they had taken. I don't even know what they do, but it's pretty interesting how they're doing that. And then I didn't even know they were partnered with Highways. So,
Yeah, they're definitely worth checking out. Ryan Joyce and the other two founders are all ex CIA agents. Uh, and so they've done a lot of surveillance in their lifetimes. And, What they're doing is putting cameras up on the highways, and they're able to monitor trucks that are moving in real time. And so, for example,
And
for some large customers that have lost some trailers, they've been able to identify these trailers moving on the road and be able to tell them where they are at any given time as they pass through the network of sensors that are out there. And then if you think about it, with that kind of data to begin with, and you start understanding patterns that truck drivers are running, companies are running, types of equipment, you can just imagine all the use cases. So, Genlogs is growing just as fast as Highway is. So those are two examples of freight tech companies that are just on fire, even when times are not good.
yeah,
We've probably
well, I
been in
think
a
that
recession since March of 22. So we're over 3 years in a recession. I know Craig Fuller called the recession over, but
it is not.
it's not yet.
The thing is,
He
though,
might
and
retract that statement today.
Craig will stick with it, but I will say he can't be wrong. If he calls it, eventually it will. He'll eventually be right. It'll have to
Well,
turn.
it is getting better.
I think that part of why, and maybe we'll dig into it a bit, is part of why I think Genlogs, Highway, and those types of companies, even in a tough environment, have been successful, is because they're solving they're actioning a real problem. It's a real solution that everybody in that industry that they're selling to needs. Whereas I think a lot of the tools that came out in 21 and 22 were solving capacity or solving pricing or solving those things that really brokers, it's a nice to have, or 3PLs or shippers. It's a nice to have, but in a time when the market's down, you don't need it. And so you won't
Yeah.
spend on it. Highway is one where it's like, no matter the market's good or bad, fraud is there. In fact, it matters more now, and my margins are thinner. I can't lose a truck, right?
Uh,
So
I- Gabe, that's a great point. Like when capacity gets really, really tight again, some of these other softwares that are sitting out there kind of struggling a little bit today will pick up.
yeah,
And that's kind of what everybody's hoping for. But the moral of most stories, like including Estes Express Lines and every other company out there, is you have to figure out how to compete whether the economy's good or bad. And
yeah.
so, the companies that are scrappier will pivot a little bit and find other ways to make it work and do things and work a little harder. So, it's not all about the economy. That's just a part of it. I kind of look at it like when the economy's flying, that's a bonus.
Yeah.
But you better learn to be profitable day to day when times are tough. So,
Well, I think that nobody can learn that lesson until they have learned the lesson, right? Like, I
yeah,
mean, I built Rocket in 2020 through 2022, and things were flying. I thought I was a genius, but really it was just that easy. And then 2023 to 2025, or 2022 last half, really 2.5 years, 3 years, has been a lot harder. But now that, Rocket is profitable in this market, I kind of hope, not really, I do want the economy to do well, but I won't be mad if it stays lower for longer, because more of our competitors will churn out and there will be fewer people to compete with when it does turn, and then we'll be more ready to take advantage of that. But
well, you're scrappy enough
yeah, if you
to
just stay
know how to
scrappy, it
compete.
doesn't matter.
Doesn't matter.
But I would have never learned the lesson of, like, not walking around saying, "Hey, how's your business doing?" and, like, pounding my chest and telling people how many employees I have. And now I'm like, "Oh, what's my net income?" That's not EBITDA, but EBIT. How much money do I
Right.
bring in? I don't need to depreciate anything. Like, what's my cash flow? And then if I can get to 100 million next year with less than 30 employees, that's cooler than saying I had 100 employees at 100 million. And so, well, I would say it's cooler from a business health standpoint. I do want to hire people because I like building a culture and I love people, and everything that I do is built around people, customers, employees, everything. But I'm going to pivot slightly back to Estes. And so we talked a little bit about Venture 53. I'm sure I'll come back to that. But Estes, do you have insight that you can share without Rob calling me and saying, "Hey, you got Pat to say something he shouldn't have"? But why are they private?
Well, I think more than anything else is, you know, like if you look at the original founder, Rob's grandfather was the original founder. It was a really, really small company. Started one truck, right?
I don't think
So
people even realize that Estes started with one truck and a grandfather.
Yeah, I mean, the story's great. He went to a banker and flipped a coin whether he's going to be a farmer or a trucker, and it landed on heads. And so they chose
Got the
trucking.
loan for the truck instead of the
So it
land.
could have been a it could have just been a farmer, and Estes was never heard of.
Wow.
Uh, but fortunately for me, it landed on heads, and
Yeah.
fortunately for the rest of the Estes family, it landed on heads. And so his son Roby, Rob's dad, was a World War II veteran and somehow survived. He was shot a couple of times and survived it all, and kind of felt like his calling was to come back and really build that business and employ lots of people. And so that was kind of the impetus of the whole thing. Uh, and so when you have, a grandfather and a grandson, and then now Rob's son Webb's the fourth generation, they take a lot of pride in employing lots and lots of people. We're
Yeah.
close to 24,000 people now.
That's
And
incredible. Yeah.
yeah, I mean, it's an incredible, credible story. But they take a lot of pride in the culture is all centered around people taking care of each other, and the benefits are great, the pay's great, um, and the culture's great. And so
Yep.
having that name on the side of the truck and kind of working for all these people from a servant leadership perspective and impacting so many lives and being able to be as charitable as they are, uh, I think they just enjoy the business. I've never met anyone as passionate about Rob, who now is, kind of turned over the day to day reins to Webb, still comes into the office, still is part of the business, still loves the game of trucking, super passionate about it. So is Webb. And so, as long as they're having fun and can do it their way, I mean, it's a $6 billion zero debt company, fourth generation, maybe the only one like it in the country.
It probably is. I think
Probably
most of
is.
them. I mean, there's a company right now that's not nearly as old or as doesn't have the legacy, but they're on the podcast called All In Podcast, and it's the founders, the co-founders of Stripe, like the
Yeah,
payments platform, and they're still private. And their claim is that next year they'll do $1 trillion of transactions in their platform or something like that globally. So everybody in Silicon Valley is like, when do you IPO? So all the employees can get, their cash outs and all of the things that all those companies do. And they kind of articulated it the same way. They just love working. And they're like, well, if we go public, there's all kinds of handcuffs and all kinds of different business structures that a public company has to do. If you look at it, I guess the way that I would look at your answer and then connect that with Rob and Webb, it'd be pretty hard to hand it off to Webb if it was going to go public, because it's a whole different beast, and they bring in hired CEOs just like Starbucks and all those other brands. Taco
yeah.
Bell, they always go, like, different CEOs go to each brand and fix them. It's a whole different ball game. So it's kind of cool. $6 billion revenue, zero debt company that can expand. But I think that being privately held maybe could have been a disadvantage in the last 4 or 5 years, because the publicly traded carriers got to ride those stock market highs, right? All kinds of funding from that. And the LTL market is, people don't talk about it, but it's pretty bad right now. It's down. I mean, FedEx just released. They release a month ahead of everybody else, and it's a different fiscal quarter. But they just released, and they're down like 8% in revenue year over year. And last year wasn't exactly a banner year. So it's been a while since LTL carriers have posted anything impressive for numbers. And truckload gets a lot of the, I guess I'll say, a lot of the press because it's a dynamic market. Capacity matches pricing. LTL carriers have been able to raise pricing the whole time, and get better revenue per hundredweight and get better everything, except for they had worse tonnage, shipment count, and revenue. But their ORs are improving. So how is Estes navigating that, in your opinion, and maybe just from your side of it?
Well, without sharing anything I shouldn't, we're up year over year. It's been a strong run for us. We're probably outperforming most all of the publicly traded companies. Um, but LTL is way, way, way less fragmented than like truckload,
Yeah.
and considerably smaller. I mean, LTL is probably a there's a lot of differing numbers, but it's 60, 80 billion, somewhere in that
Yeah.
range, depending on how you kind of calculate it. Maybe closer to the 60.
Yeah, because there's 3PLs that are, like reporting the carrier's revenue plus theirs. And so it's kind of the
Yeah,
LTL true carrier revenue is probably 60.
and I would actually argue that there's less capacity today than there was a couple of years ago, because there's still, what, 90 terminals that Yellow has, 80 or 90, I can't remember which, still haven't sold yet, like still haven't hit the auction. And so, while there's not a lot of builds going on because it's so expensive to build and it's hard to find land. Nobody wants a trucking terminal in their backyard.
Nope.
So it's a tough business to get into. Like, so there hasn't
Barrier
been
for
a,
entry is
like,
extremely high.
yeah, it's so high. And you, in 30 days you can be up and running with a truckload company, and there's literally thousands and thousands and thousands of them. And
Yeah.
so we've been in a long sustained downturn because so many drivers and companies came into the industry to ride that COVID wave, and it's just taken longer for them to go out. Normally they would have gone out faster, but they made enough money to stay longer. So
Yeah.
I think it's just lasted longer. And but LTL is not like that. LTL's much less fragmented, and in order to continue to reinvest and create capacity and be able to service your customers, you've got to deliver a profit, or it's not worth doing. So,
Yeah, I think that is probably the most important line that people don't consider when they're looking at truckload versus LTL. And I have customers all the time, especially over 2022, 2023, 2024. Why is truckload pricing? They would send me Sonar or DAT, like truckload cost per mile, everything's down. And LTL was kind of the same or going up with a GRI of 5.9 or
yeah,
7, right? And my customers are like, why are you charging me more when the market is down? And I'm like, well, for one, I'm not the LTL carrier, but two, it's a different dynamic and there's only 10 players that matter. There are more than 10 players, but that's just my generalization. And they, in 2008 through 2000, I don't know, 19. Well, 19 was a bad year too. A lot of LTL carriers didn't make a profit. Like they
yeah,
were running at ORs of 90 something, and that doesn't happen anymore. Or a lot of the carriers are going away from that. Old Dominion was the only one that was ever like, "Hey, we have a 70 OR." Everybody else was in high
right.
80s or low 90s. They weren't making money, and now XPO's posting 85, 84 ORs, or maybe 86. I don't want to misquote that, but they're making more money, and they're making a profit. And now it's LTL pricing. The way I look at it is like the carrier can choose, not as much as maybe 2022, but the carrier can choose what type of freight they want to take. If they don't want overlength freight, they can price that out of their network. If they don't want 3PL transactional, they can put all the 3PLs in the same channel instead of having different pricing. They can give increases when yellow closes. All of those things are just LTL carriers have that dynamic. But would you say, the yellow closure and then everybody was a mad dash for yellow terminals? How many did Estes buy? Or is that not available publicly?
Well, it's probably available publicly, but we just bought a few more, so I'm not sure what the total number is now. Uh,
Compared to Saya, did you guys buy more or less? Because
but
I
we
know,
we bought a few more than Saya. Yeah,
yeah. So you guys expanded a lot of terminals, and
we
Saya did
did.
as well. XPO did some, but I don't know who was the biggest getter on that. But Saya was up there.
I would say Saya and Estes were probably the two big ones.
And that's interesting strategy because you guys are going after terminals and not having to build them. I mean, Yellow going out of business for Estes, and Yellow going out of business and T4 struggling are like two really good head or tailwinds for Estes, in my opinion. Um, Yellow and
Yeah, you
Estes,
never wish any ill will on anyone, but certainly Estes and others have been a benefactor of the challenges at T Force and certainly the demise of Yellow.
yeah,
Um, but we were doing well coming into that, and it's just an opportunity to go back to the publicly traded versus the privately. We're thinking decades in the
yeah,
future, making
it's a huge
decisions.
difference.
It's a big difference. We don't we don't really even talk about quarterly results. We do, but there's not a pressure to we're behind and we've got to do something to catch up. We don't even that never comes into our thought process. We're thinking many years down the road, and I think that's a big advantage for a company.
I think it's a huge advantage. And, XPO obviously splitting their stock and differentiating, and what Brad Jacobs did was really impressive. I think on the other side of it is Estes, right? There's the go big, consolidate, roll up, and then split. And then, of course, you've got Old Dominion, and they're the standard, and everybody's in love with them. And, I don't really know anybody from there, but I'll have them on the pod sometime. But I really do like the idea of talking through, like, when Yellow goes out of business, how did Estes react to that? Because I think you guys had the craziest 2023 an LTL carrier could have had. Your main competitor goes out of business, and then 2023 October ish was a cyber attack, right?
Yeah.
So take me through. You wanted to capitalize on the Yellow business. It's a zero sum game in business. So even though it was like, hey, we don't want their demise, it happened. And you guys had a huge ability to capitalize. But oh, it looks like my camera died. So now I got a new angle. So if you decided to go down the route of capture that business, and then walk me through internal Estes when the system goes down, cyber hack, all of that ransomware, you guys couldn't capitalize on the business. What a crazy time.
Yeah. So, you know, capitalizing on the Estes business, fortunately for us, and I think one of the reasons we were one of the biggest benefactors is, some of our larger customers are like Amazon, Home Depot, Lowe's, a lot of
Yeah.
retail type stuff, right? And so was Yellow's. And we shared a lot of accounts together.
Yeah. Right
And
next door in the
so
drop trailers, Yellow and Estes.
we were kind of already in the mix. And so you see a lot of that business that they were given to Yellow just come on to Estes. And so we weren't really out there trying to win a bunch of new business. We were trying to handle, what was flooding to the market and that freight trying to find homes.
So you weren't in land mode. You were just expanding in current business.
Yeah, we were just expanding with an existing book of business. Now there were some, opportunities that we took advantage of, but those were few and far between. We weren't out chasing that hard.
Yeah.
We only had so much capacity, and service is such a key component of what we do.
Yeah.
But then we get hit by the cyber attack, and you know, one of the things that we had become really good at over the years, there was a time when maybe a disadvantage of Estes was we weren't probably as technology savvy as a lot of other companies.
Yeah.
We were still running AS400 green screen world,
With the little cursor that blinks.
right? But over the years, we've really moved to the forefront of technology in this industry. And we're running a lot of really interesting software, anything from optimizations to APIs, et cetera. So we had done a great job over the last 5 to 10 years of digitally connecting to our customers. And so when our systems went down, that was a problem. Had we not done a very good job,
Then
then
it would
we
have
would
been
have
like,
been just fine. But the interesting thing about the cyber attack, Gabe, is you learn a lot about your customer base. And so our job as salespeople was to convince customers, hey, look, just figure out a way to keep shipping with us. We'll take care of you. Just keep shipping. But we lost half of our business overnight. And so that is a train wreck. And
yeah.
we weren't going to pay any ransom software, so to get to get that cleaned up. So we did it all ourselves, and the IT group at Estes was amazing, and we brought in a third party partner to help. And
Webb was
you know,
doing the videos every day with updates, and
yeah, we made a decision very early. Webb decided to be very transparent, which was, I think, a brilliant decision. Kept
it was a
everybody in the
risky
loop.
one, but it ended up being the right move.
Yeah, it ended up being the right move, and you know, by the 12th period for us, we're in 13 accounting periods. Um, we set a record shipments and record revenue, came out of it stronger than we went in,
Jeez.
more secure today. And I think that, is probably it's a little bit of the story of Estes is, whether it's a recession or We had a hurricane hit Richmond one time and flood our whole IT group, which was probably our worst decision, was to have that in the basement. Uh, but
Oh, you
we
had to keep the
flooded, that
servers cool.
hurricane sat over us for, a full day and backed up the sewer system in the city of Richmond. And completely, I was wading waist deep in water,
Oh,
checking on our IT, and, it was just all underwater. And so we had to rebuild and deliver on paper, for a month to, 6 weeks.
jeez.
Uh, but we came out stronger. And when we came out of the recession, 2009, 2008, in there, we came out stronger. And that's maybe just the story of Estes. Is it's just a lot of gritty people who, when things are thrown at us and times get tough, this company rallies like nothing I've ever seen. And, I get to be witness to lots of companies and how they do things and what happens when things go wrong and when
Yeah.
they get cyber attacked and, when they have floods, when they have issues. I get to watch, how other companies handle that and be in the loop on that. And, I'm truly amazed at the people at Estes that, take leadership roles when it gets tough and step up. Man, they should write a book about
I
that
mean,
day.
Rob and Webb and what was what Rob's dad's name is Roby.
Roby, yeah.
Roby. I think I never knew the story, and I've been in LTL for 10 years. I did not know the origin story of Estes, so they got to get
Yeah, I
it
mean,
out there sometime.
I would, I would argue that Estes is one of the most successful businesses in American history. Like,
I
it
mean,
is,
fourth
it just,
generation, $6 billion, 24,000 employees, American company,
and I think we've
survived
only
all of
had
those
maybe
different
like 1 or 2
time periods.
years where our revenue didn't grow.
Yeah, and I think that part of it has to be. I mean, it's crazy that Estes in a market now, they're not publicly traded so that people don't pay attention to it. But if you're not looking at one quarter to the next and saying what was our QOQ year over year, all of those comps, and having to say, hey, let's go get some Saia freight. Let's go get some freight from FedEx Freight out of this account. Let's drop pricing to meet numbers. And then you actually build a sustainable company over time. I had no idea they were that incredible of a company. I just knew they were a good LTL carrier.
Yeah.
I like about 5 LTL carriers, and the rest I have to use. Estes is one of the ones I like. And
Well,
so
thank you, Gabe.
it is interesting, going to I guess my comment would be business is, the test of a good business is how many times they've had to rebuild it and then they survived it each time. Because I don't know if you saw in the news that company 23andMe, you ever heard of that? That
Yeah.
they just went bankrupt.
Yeah.
And now the top bidder is going to get everybody's DNA. And I'm like, well, geez, I don't think that's how it was intended. Can you opt out?
No.
But I don't know why that company would go bankrupt. It doesn't make sense. They're so big. They have the economy of scale. And then you look at some of the legacy brands that are going bankrupt, and Forever 21 is closing all their stores. Estes is as old as a lot of those companies, are older than Forever 21, I think.
Yeah.
Same age at least. And it's family owned and been handed down from father to son, which is impossible anyways. That almost never works. And they've done it 3 times now. There's a lot of
Yeah.
crazy success stories there.
Yeah. I
That's
agree. I
cool.
mean, I would, it's almost, I mean, you hear the saying like culture trumps strategy. And, a lot of a company's success, like if you've ever read like Good to Great and you begin to look at what makes companies sustainable over time, it's really the consistency and the leadership and the buy-in and the people. There's not a lot of magic like in our case, there's not a lot of magic in terminals and trucks and tires and diesel fuel. And
Yeah, those are all arbitrage at that point.
yeah, so it's like, where is the magic and how do you create differentiation and what gives you competitive advantage? And, at the end of the day, it's people.
Yeah, and if you don't think about it, people don't put a lot of thought into, their Central Transport and Roadrunner, and they've had their place in the market, and Roadrunner's done a whole rebrand, right? And I think they opened up new terminals now, or more lanes in their major metros. They've gone through a whole rebrand. People don't remember, but Old Dominion used to be Central Transport, and now they're
Yeah.
Old Dominion, and so everything is they all have trucks and trailers and tires and terminals, and it is the people that make decisions on how they're going to market and how they're going to go to market that makes the difference in a competitive environment where everybody can pick up and deliver freight. Some choose to be on the cheap end of the spectrum and then the service matches. Some choose to be on the expensive. And I'm not saying Old Dominion's always expensive, but they are. But they deliver on time, and they have the TV commercials and the World Series, all the stuff. Estes is an interesting one, and R&L is probably the other interesting one. You guys are very similar type. I don't know the origin story of R&L, but in a market where T-Force is barely hanging on and Yellow went out of business and Estes is growing, something's different. They're the same type of company. And I think that it's the same thing as like if you think of people who are doctors. Just because you're a doctor doesn't mean that there aren't doctors that are the ones that work at Mayo Clinic out of Minneapolis or Rochester or
Yeah, oh
UPenn.
yeah.
Like there's the best doctors and then there's doctors. Same in LTL. And I think Estes obviously I thought they were a good LTL carrier, but now that I've heard the origin story, I think they're the best LTL company, basically maybe one of the better American companies.
Yeah.
It's pretty cool.
Yeah.
I learned
It-
something today about Estes.
well, that's good. That's good.
Pretty cool.
Yeah. It's been a really fun company to watch, and be there on the inside and be a part of the, strategy meetings and meeting with these guys every Monday. And, it's fun to watch. Very opportunistic company.
You just got to tell Robin Webb, or probably Webb now, he should just start building a personal brand, and then like everybody will understand the story. It'd be easy to fall in love with that story. If everybody knew it, they would choose Estes over other carriers that are publicly traded just because of it. So get the story out there more. But I have some more questions for you, not about Estes. What do you think is going to happen if capacity, let's say the market recovers and the economy gets strong? What does LTL pricing do? Do you think it immediately has some increases, or do you think there's capacity to fill in first? If I'm a shipper out there, I'm trying to do my budget. What do you have planned?
Well, you know, as all this new capacity gets redistributed, all of us will have more capacity, right? But it all kind of gets redistributed and filled. So it's not like there's this excess capacity rolling everywhere.
Mm-hmm.
So Estes will have more, Sia will have more. So Estes, as capacity gets tight in the industry, Estes, in my opinion, what we'll do is we'll continue to charge a fair price for what we do. So we'll
Yeah.
charge a fair price for really good service. And we don't historically raise prices. We don't really play that. Capacity is really tight. We raise prices like crazy, and then we cut prices real bad when it gets bad. We're much steadier of a company than that. And I think that's really what the customers want is more consistency in the good times and bad. And they want us to have their back when the times are bad. And we want them to have our back, or when the times are good or whatever. Just take care of each other and don't gouge each other.
Yeah.
And so
Just
I
makes
think
sense.
that's been like, we don't lose a lot of customers. And that's been part of the magic formula over the years is you're just continuing to build on the base you had last year. So if you're not losing customers, it's much easier to grow and it's much more affordable to grow.
Yep.
So I don't see, this cycle will cycle through. The economy will get better. I think we're going to have some really good times in 26 and 27.
Eventually it'll have to hit, and it
28.
will be good times when it does.
Yeah, and it's going to be really, really good because there's a lot more manufacturing going on in this country coming up, and a lot of stuff being built right now. As we get the housing shortage sort of figured out, interest rates start coming down. Gasoline prices are already coming down. Everything's made with gasoline, so
Yeah.
uh,
People don't remember that as often as they should if gasoline
yeah.
prices are cut.
So inflation's getting better. This thing will shift around. Our economy will start booming again. There's a lot of innovation going on, a lot of stuff happening. There are good times coming. It's not, it's, but like we go back into the beginning, just learn how to compete when it's tough, and it'll be much easier when it's good.
I'm excited for this next growth cycle because it'll be so much different than the first one I experienced at Rocket anyways, with 2021 being like the metric, because the
Yeah.
growth was so explosive that every day there was a new embargo for delivery. Like, okay, we got to turn off Louisiana, or we have to turn off this. And it was like, okay, great. I can go sell to a bunch of customers and bring on a ton of LTL freight, but I might not be able to deliver it. And I might not know which markets I can service. It was a lot of uncertainty. And I hope that the next growth cycle, there's more capacity with Yellow out of the market. And it's just like, hey, let's just turn it on the afterburners and ship a bunch of freight. Let's increase our shipment counts and do it sustainably. But I do think part of it is, the impetus between the short term, the tariff war that's going on. And I see a lot of speculation, and I am never afraid to share my opinions on my podcast. So I will. I see all this fervor about like how the tariffs will impact LTL short term. And I'm like, you guys are missing the forest through the trees. If we reshore and manufacturing's in America, like, I don't know if that takes 5 years, 10 years, however long it takes. LTL would never have a better environment than if everything was manufactured in America, not just Mexico and Canada. But if everything, not everything, but if pharmaceutical and defense and aluminum and steel and AI chips, all of that's LTL all day long. All of it's
Yeah.
LTL. I mean, of
I
course, there's
agree
still
with you.
truckload too, but
I
that's just
agree. I will make one prediction. If we get back to the crazy 2021 in the future, it'll be worse in the future
Do you
because
think so?
the industry won't be able to grow capacity at that rate if we see like explosive growth. So it will be embargoes and delays and, you know, I
As
just
long
don't
as you can
see.
promise, if you can promise on this podcast today that overlength doesn't go down from 96 to like 60, I'll be fine with the embargoes. Okay. I can't survive another overlength scare, but
That's the great thing about being in sales is you have nothing to do with that.
good point. Oh man. Well, Pat, I have to catch a flight. Otherwise I would go another hour with you. I appreciate you coming on. I always ask everybody this on the end of the show as a kind of a wrap up question. And you've got a long history, 25 years at Estes. You've started V53. So like you could take this from what you learned from the beginning days of Estes to now, or your newest venture with V53 and a couple of learnings there. But what's one thing, if you had to pick one, that where you made a mistake that you didn't have to make, that wasn't foundational to you learning it in the school of hard knocks and being able to get better from it, but just a mistake that, man, that was silly. And if someone else is listening, they can say, hey, I don't have to make that mistake in order to learn how to build a business. Does anything come to mind?
Yeah, it does. It comes to mind right away. Yeah. So it's probably a series of little mistakes that cost you more than one big ones or continuing to make the same mistake. But I would say this, and it doesn't really matter what position you're in within a company, follow up is critical. And so making the mistake of making promises you can't keep is the killer. I mean, all you have in this world is your word. And if you do what you say you're going to do, then you're going to be successful in life. And I've made the mistake too often of not exceeding or at least meeting the expectations of this motor mouth sometimes. And
Man,
so,
that's powerful right there.
yeah,
Especially it's always relevant, but I just feel like in this environment when, the differentiation between companies and technology is less and less, it's more, hey, if I say something, I'll do it. And I fall into the same thing often where I'll just say, yeah, I can have that by Friday. But in reality, can I really get that done by Friday? All I would have had to say is I'll have it done in 2 weeks and then get it done by Friday. They'll be happy. If I get it done Monday now, I already overpromised and underdelivered.
and
And
it
just
gets
managing
harder as
small
you get involved in more things, right? And you're
yeah,
running more things and doing more things. You want to be responsive, but you end up in a pick and choose. So really getting setting the expectations is really, really key, I think.
yeah. All you have in this life is your word. I like that. We'll close it on that. I appreciate your time, Pat. Thanks for tuning in to another episode of Let's Talk Logistics. And this is going to be a great episode. See you guys.
You bet. Keep rocking out there, Gabe.